Please read this disclaimer carefully before proceeding further. Hi traders, let's look at DXY. My name is Vic. Thanks for joining me in this analysis. Okay, on DXY, if you remember, we know that this month can actually complete as a bearish candle because of previous strong candles here. But this level, the level that the previous candle closed at, near about this, okay, 89.9, near about that level, that is still going to be protected. So if the candle actually closes as a bearish one, I'm expecting Feb a month to be bullish, and that actually increases the probability. What I mean by that is, if this candle closes as a bearish candle, the chances of having a bullish candle in the month of Feb is going to be much larger, because it needs a bullish movement. It needs a bullish candle at least after this, this structure, and because we are in a kind of demand zone around here. So if this actually completes as a bearish one, the next month is definitely going to be a bullish candle. Okay, so that's a strong possibility. I won't say definitely, but there is a strong possibility there, and there are a few reasons behind this. As I mentioned before in my analysis, what we have here is that if I draw Fibonacci on it, we have multiple patterns here. One of the pattern is actually completing right there at 88.6, and that's why the market is showing us initial reaction here. Remember, we are still looking at monthly time frames, so do not expect it to just shoot up. I mean, that can also happen. If it can shoot down, then it can shoot up as well. Okay, this has happened before. Look at this candle, it has happened before, so anything can happen. Okay, let's draw some of the important levels here just by looking at these moving averages that we have got. Okay, these are the important levels that we have, and let's look at right. Okay, and this is the zone that we are in. This is the monthly time zone, okay, monthly demand zone, and this is not FCP zone. This is more like demand zone. Okay, if I go to the weekly time frame, if you remember, in one of my previous analysis, I mentioned that this week was going to be bullish, and that's exactly how it worked. And I found out because of this rejection from this previous rejection from this demand zone, and now market actually came to this moving average and started to fall down. So this is a very strong candle. It is actually kind of like in a pattern, so it can actually start to fall down, and we are looking at near about, these are all approximations, I'm not giving exact levels, so you have to be a little careful with them. Exact levels can only be done by if you're doing deeper analysis with this. So these are the levels. Okay, if I go to the daily time frame, what do we have here? On daily time frame, we have this W pattern forming right now. Okay, and if I draw Fibonacci on it on the bullish side, then what we have is, this is, give me just 1 second, this is a good level here, and we have this level as very good. Oh, sorry, this level is a very good one, and that actually gives us an FCP zone here. Let me change the color of it. Okay, right, so that's on the bullish side. If I yeah, there is another one which is forming right here. Okay, yes, yeah, so we have another zone right there. Okay, so that's also an FCP zone, right? But I'm not expecting it to actually just go straight up there. Let me show you the bearish side of it, because there are good chances that market may actually fall down. So if I go to the 4-hour time frame, on 4-hour, what has happened? If I just show you the current state, the market has been bearish. It has been below this moving average clusters, and now it has come back to retest it. What do you expect? You expect some reaction here, and that's what has happened. It tried to go back up, came back down, and got rejected by these moving averages once again, right? And in that process it is creating this head and shoulders pattern. Now I'm not a huge fan of head and shoulders pattern, but that also adds up to this possibility that the market can go down. So if I draw Fibonacci on this, because we have this M pattern forming, if I draw Fibonacci on this, what I see that the market can fall to this level. So these are important levels that we have got. Okay, one is around here, so let me give you that. Okay, that's an FCP zone here. This FCP zone is inside the demand zone. Oops. And then we have another FCP zone, which is going to be, yeah, like this. Okay, so that's how it is looking on lower time frame. Okay, but you have to be careful with this because there is so much noise at the moment. The market is like going up and down, so you have to be careful. If you're day trading, you'll have to be extra careful, because the chances are that it can go down, but at the same time it is kind of like it is going up and down, it is going sideways at the moment. So you have to be careful if you're day trading. Let's look at it on what I envisage. So let me just bring it up. Let's look at dollar index here. Okay, let's look at on weekly time frame. On weekly time frame, as we can see, the color has started to change from red to green, which shows that there is an early indication that market wants to go up. Then we have the water color changes as well. That shows that it wants to go up, but this is a strong candle and it has a potential to come back down. And this level of 89.57, where the water wave is, because water wave also acts as dynamic support, right? Support and resistance. So 89.57 is kind of the level that can actually give us a little bit of support here, and then it may start to go back up. We have already started to see bullish indications here. Let's look at the daily time frame. On daily time frame, what has happened here is that market gave us bullish signal, and this was supposed to be the profit target, but because the market is bearish, we do not expect that to be reached like straightforward. So it needs to go through some of the process. So it came to water curve, which acts as again dynamic support and resistance, and started to fall down. So if the color changes from green to red and the color changes from blue to red here, then you can look for short opportunity on daily time frame. So this is how it is looking. Okay, and this is the target that we found from the weekly. So if I draw Fibonacci on it, you see most probably it is going to line up with 78.6 or near about that zone. That one, the one that we saw, that's close to 88.6, so near about that. So this is where the market can fall back to. However, it can go back up to this level as well to retest that water water wave. So 90.49, 90.5 it can go up to, and if that holds, then it will come back down to 89.5, near about that. So that's what we have here. If I go to the 4-hour time frame, these are the levels. Currently we have this bullish target. It may or may not be reached, but if it starts to move up, then it can come to 90.5, which we saw. Color has changed, but water curve is showing that the trend is shifting again to the downside. Okay, so this is the level near about that, and that's the previous target as well. So that's what we have on DXY. Hope you enjoyed this analysis. If you did, hit the like button, and in the comment section let me know what you think about this analysis and what is your opinion on DXY. Right, I'll see you in the next one. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see core strategy training program. On this page, you will be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence training program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to vikinsa.com and under training section, you'll be able to see and submit this form.